80% of all breakouts fail, and 70% of the time, the market is trading sideways in a trading range. But how do you know when the market is about to go into a trading range? Or once you're already in one, how do you adapt to those conditions? How do you know that you have the highest probability of success on that trading setup? If you have not checked out that video in the top right-hand corner, I highly suggest doing so, as it explains the full range of what this trading style is from start to finish, with a very simple explanation at the end of exactly what to look for on any given day, excluding the portion about the trading ranges. The market is constantly building ranges and then eventually expanding those ranges to one side or the other. But in the meantime, their whole goal within these ranges is to trap enough volume in one area of the chart so that when they shift away from it, the market makers or the algorithm, whatever, it can make as much money as humanly possible. And you're going to constantly notice that the market will put in these peak formations on either side and then build a range in the middle. And that is the trading range. So why do we want to avoid the inside of these? Well, just look at this. It's just whipsaw back and forth. And of course, if you're trying to trade in the middle of this at any point in here, you are at a very low probability area of the chart. And typically we are trying to stay on the outside or as close to the outside as possible up here and down here once we have identified that we are in this trading range style. What we're going to do is look for 3-day templates that align with high of week and low of week reversals once we have identified this trading range. So why are we staying on the outside? We want to avoid choppy markets. We want things that are easier to size into. We want things that move. They show commitment to a direction. They're in breakout mode, or they're expanding a range aggressively to one side or the other. Or once they come to the outside, they break out. Again, 80% of breakouts fail. That breakout fails, and it shows commitment to go back to the other side of the range. Again, keeping our risk small, and our probability of success or probability for that trade to work out goes up significantly. Some concepts that every single trader, regardless of trading style, should understand is that there is a definition for a consolidation. Every price movement in between a high and a low builds a range. It builds a consolidation. Now, markets are fractal, and just because you're in consolidation on a 1-minute chart does not necessarily mean that you're in consolidation on a higher time frame. That could be a weekly chart, that could be a daily chart, 15-minute, whatever it may be. Our goal is to identify the larger market condition and trade based off of those style of 3-day templates. There are 3 things that markets do. They're going to break out, pull back, and trend, making a trend. They're going to break out and fail, a failed breakout. When they break out and they fail, going back towards the 50% of that range or the other side of the range. Or building a range, a peak formation high and low, or building a high and a low, and then consolidating in the middle, making a trading range. Now, of course, there's lots of different types of being on the outside. You could be on the outside of a previous day's range. You could be on the outside of a previous week's range. You could be on the outside of a previous month's range. But understanding that when you're on the outside of these levels, they're only going to do one of those 3 things that we talked about with the market conditions in the last slide. They're either going to break out, pull back, and trend, break out and reverse, or they're just going to break out and fail and then go back into a range. They built a high, they built a low, and they're in a trading range. As previously discussed, we want to be on the outside because we have less risk. Maybe sometimes the top of that box becomes the bottom of a box for a range expansion, and that gives us our low amount of risk. The institutions, the large money, they are trading from the outside of these ranges as well. Once these levels are formed, it's all eyes on that level, and you'll find much more significant, you'll find a lot more significant evidence of large money traders at these areas of the chart. There's very objective levels that are associated with being on the outside. That is the previous day's high and low, the previous week's high and low, previous month's high and low. When all parties involved agree on the direction, that is when you get very large, very fast, and very strong moves in one direction, pushing the market from one side of the range to the other, or breaking out and expanding that range to one side. So, for example, a normal setup that we could be looking for is maybe week 1 of breakouts, right? They've broken out of a previous week's high. Maybe we have a previous month's high up here that the market is reaching for, but we are in breakout mode of a previous week's level, and that can give us the beginning of our trading setups or opportunity if they were to present in a certain manner. For example, I've got this nice, super fancy Picasso drawing up here for all of you to stare at but this breakout of a previous week's level, right? So we're in breakout mode to the upside, and then we have maybe 1 day of decline, maybe 2 days of decline, but eventually pulling back. If you want to put it in simple retail terms, breakouts, pull back, and then now thinking more about the signals and the style of setups, which you can definitely learn about in that previous video, maybe 1 or 2 days of decline, so multiple days of dumping, and then getting a first green day in a breakout market, a market that is breaking out to the upside, allowing us to then look for a trade either on the following day if it presents the proper way, or even looking for it on the day after if we didn't get an opportunity to enter on this day, depending on how that day closed. So normally we would look for dump, a first green day, and then looking for a low of day opportunity on this next day. But of course, sometimes with the news and different things, you don't always get that perfect presentation that you want, but don't forget about that pair. Look at how that pair closed, and then you can look for that opportunity again the following day. I'm going to slow it down on this slide because there's lots of things to look at, and it's very important. Again, just emphasizing the different kinds of breakouts, showing that we are on the outside, either expanding a range, or maybe we're looking for a failed breakout, or the market has already broke out and failed. In this case, you notice the previous month's level, right? The previous month's low. They broke out of a previous month's level, and it actually failed right here. So this week ended. The breakout is now failed. And then on the following week, notice how this turns into an inside week. So we're in between a high and we're in between a low, the breakout level from that previous month, building a range or a box, right? And then we get this inside week. Now we are in a breakout market to the upside. We get this inside week, which could indicate that we're in a trading range, but also that we're in breakout mode. We get a first green day, and that allows us to look for the low of day opportunity the following day, looking for a strong close to indicate maybe further buying on the next day. We get another low of day opportunity. And again, now we have broke out to the high of the previous month up here. And that again repeats the process. We have a breakout of a previous day's level, a breakout of a previous week's level, and now potentially the breakout of a previous month's level. Not just assuming that because we've tapped into this level that it's going to fail, but understanding the weekly template. We have the big up move here, the breakout day, and then it's closed strongly up by its highs, giving you the opportunity to look for the continuation trade on the following day. There's the low of day, breaks the low of day, engulfs back up to the upside. That is a trend trade in a breakout market to the upside. Again, just following the idea that the market only does 3 things. That is really going to help you when you're looking for the different kinds of templates. But when you're in breakout, the signal days become a lot more relevant. Hey, we're in breakout to the upside. Hey, we got a first green day. We've pulled back. Now it's time to go back to the high. But Cameron, you said this video is about trading ranges, and it 100% is. But I had to start with the looking for things in breakout because, well, if you're in breakout, then you're not in a trading range, right? So looking at the different signs and symptoms of a trading range, now we can start to get into that portion of the video. But Cameron, you said that this video is about trading ranges, and it 100% is. But if you're not in a trading range, then you're in a different market condition. But there are signs and symptoms of when that trading range or that range is forming that you can identify early on to keep you out of weird trades where you're trying to buy thinking it's a breakout, or you're trying to sell thinking it's a breakout. Or if you're in the middle of this range thinking that that weekly template is going to do X, Y, and Z, come to find out you're at the high of the week and it sells off because you're in the middle of a range. You're not in breakout mode. So let's take a look. Some of the signs and symptoms of a trading range starting to form. Now, this could take place over multiple weeks. It doesn't have to be like this where it's this week and then the week immediately after. Sometimes they'll put a little inside week in the middle. Sometimes it'll do lots of different things. But one really great way of identifying these is maybe you're in 3 to 4 weeks of breakouts in a direction. Or maybe even more. You could be in 5 weeks of breakouts. Overall, though, you're in an extended market to one side or the other. And eventually, they're going to stop moving in that direction. And when they do, especially after a very extended period of time, you can expect that sometimes, or a lot of times, that consolidation will be a little bit larger than a very quick kind of A-top reversal where it goes up and it peaks and then just goes right back down, and then maybe they go down for a few weeks and then go right back up. That's not a trading range. They've gone down for a few weeks and then they break back out to the upside, and you can continue looking for those templates, and that's really good. However, whenever you get a market that has gone multiple weeks in a direction and then you get this kind of peak formation high and then maybe a week of separation or even the following week, and then it breaks out to the low and that breakout also fails. Well, what has happened now is the market has gone up, broke down, there was resistance there or whatever, that breakout failed, and then it came down here and found support or whatever, and now we're inside of this range. So what I like to do is project this level across and then project this level across and wait and watch price action move inside of that range. And what you're going to start to notice is they start to ping pong back and forth. This area, this breakout level, becomes an area for resistance. It could trade back down to the bottom of the range and find the same thing. Now, of course, this movement could take place over multiple days or even a week or whatever it may be. I've got lots of examples to show you. But these are the early warning signs. These peak formations that form the failed breakouts, they happen at both sides of the range. And that puts you in the middle of that range. All right, overall, that's the high and that's the low. And now you're stuck in between. And until they break out of this and continue in a direction, you are in a trading range. Some other indications or symptoms could be, you've gone up multiple weeks like this, and then maybe you get this failed breakout week or whatever, but the swings start getting really wide. All right, it's almost like they're playing ping pong with each other or with the high and the low, and it starts swinging real wide like this back and forth. They could slightly extend to one side or the other. But on a higher time frame, it's probably going to look like some kind of classical charting pattern over time that is building. But down on the lower time frames, like the 15-minute chart or the 1 hour or whatever, of course, you're not going to really notice that. But once you get up on the higher time frames, you would have seen that, like the daily or the weekly or whatever. But yeah, these peak formations and the wide swings, really big indication to the fact that market conditions might be changing. Exactly what I was just talking about. Notice over here, I've got a lot of things circled. They broke out of a previous month's high in this example, also the previous week's high. So we're in breakout at this point, which is fine. And notice how when they come back, they came back to that previous month's high level. Again, breakout, pullback, maybe looking for continuation, maybe not. But now looking kind of a little bit lower. The previous week's high, peak formation high. Now we have a week of breakouts to the downside, which is fine. All that's good. We don't know that we're in a trading range yet. However, whenever this came down and then it spiked back up into the previous week's high, notice how they broke out a previous week's low and the previous week's high, and then now we're inside of that week's range. And from this, if you project these levels across, you're going to see that there's a high of week opportunity here. There was a low of week opportunity here. Again, another high of week opportunity here at the top of the range, another 3-day template. There was a low of day opportunity here, a 3-day template. There was a high of week opportunity here, another 3-day template. Same thing here. And then, of course, once we start to get up here, there's more opportunity now on the outside of that range for those reversals as well. This was the dollar CAD. This is a fairly recent example, April 9th to June 25th, that they've just been sitting in this trading range. A slightly smaller example, noticing again, common attributes, common pieces of when the trading range begins. Previous month's high is broken out of. A new month has began. We broke out of a previous week's high. We broke out of a previous month's level. And then we came up here and triggered a previous week's level, and that breakout has now failed. The breakout of that previous week's level failed, and they pulled back down on the inside of the range. Now, I want you to notice the swings. I want you to look at how price is moving here. Big, wide whipsaws back and forth that did go vertical, which is great, but then immediately we're still inside of this range, and price continues to just whipsaw back and forth. Then we get an inside week that also continues to whipsaw back and forth. And once we finally get a breakout to one side or the other, now we have more fluid, more fluent price action, and we can resume looking for a new market condition style of setups. We are still looking for 3-day opportunities, looking at the 3-day cycle, looking at those buy and sell days, but the market conditions have changed, and now we can start looking for follow-through opportunities. We can start looking for 3-day templates where there's trend trades involved, and things of that nature. All right, again, common things that have happened. Previous week's level has been broke out of. We had a previous week's low breakout here that failed, and then basically that's the high of the previous week. That is the low of the previous week. You can project this level across and notice the resistance at those areas. And the support at those areas and the resistance at the other side of the range. We had a failed breakout down low. We also had a failed breakout up high, giving us this level here. And you can, like I said, project those across. Again, breaking out of previous month's levels, previous week's levels, and then failing, coming back up on the inside of these ranges. So we had a previous week's level broken out of down here that failed, and then a previous week's level, notice the breakout to the upside here, but we broke out up here and have now failed. So now we have a failed breakout down low and a failed breakout up high. And similar to that earlier example where they contract the range, this was the original low down here, but we had a peak formation high up here. Previous week's level broke out of and failed. A previous week's level broke out of and failed down here as well. So now we have our defined limits for our trading range. Again, low of day, low of week opportunities, low of day, low of week opportunities, and high of day, high of week opportunities up here. Am I saying these are the best trades ever? No. Is it something that you could maybe look for? Absolutely. And again, once we start to get our breakouts to one side or the other, now our trading price action starts to get a little bit more clear. We had the failed breakout of a previous month's level down low. Now we have a failed breakout of a previous month's level up high. Okay, so now we have our defined, oh my gosh, these lines are going to drive me and everybody else watching this crazy. So our levels here in place, something like this. All right, so again, breakout, pullback, and then maybe continuation if you choose to do so. But we continue to move now that we're in breakout to one side or the other. So once you've noticed that you're in one of these ranges, you've identified your peak formations, you've identified your failed breakouts at either side of the range. You have some options. Number one, you could just not trade that pair, understanding that you're in a trading range and that that's just not the conditions that you prefer to be trading. That's perfectly acceptable. That's perfectly okay. And that a lot of times is what I actually opt to do. However, whenever we get really clean, really clear, and really pretty 3-day templates with a nice stair-stepping action, and we're at the high or the low of the current week, I will absolutely look to take those opportunities because they are playbook, textbook sort of opportunities. So for example, we've identified our peaks here and here. That's in hindsight. That's already done. And I've identified that we may now be in sort of a range. You can also see, notice the whipsawing back and forth, whipping traders every direction except for the correct one. All right, so we've identified our range. Notice the peak formation that was made down low. We had the peak formation low, we made a new one, and then we get our 3 levels of rise, which means absolutely nothing unless we get a peak formation high. We're also in the trading range condition of market. We're at the high of the current week on a Friday, and we're at the high of that range. So that could give you the opportunity to then look for that reversal if it presents in your session, of course. This is another example of a market that has put in peak formations at an area of the chart. Now, this is a previous month's high, so we broke out of this level. We broke out of a previous week's level. Okay, so we're in breakout mode to the upside. Fantastic. Except then we get an inside week, and we're in between the high and that breakout level of a previous month's level. We also have this inside week now to think about. And once we come back down to the low of that inside week, now we can look for either reversal opportunities, or really that's just it, or just don't take those trades at all. But once we get back down to that level, breakout, 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 pullback, and then we're looking for 3-day templates that would allow us to enter this thinking, or the thought process being, trend trade in the direction of the overall market. So we'd be looking for first green days, 3 days of breakouts to the downside, those types of trading opportunities. Now, we still have our range, the high and the low. Even after this week is closed, we still have that high and that low, and we're in the middle of that range. Now, of course, on Monday, we get a signal day. Fantastic. We're at the bottom of that range. We're at the breakout, the pullback area, and we get a first green day to look for a low of day buy opportunity on the following day. We're in a trading range. However, we're still in breakout mode, and we can trade the trend trade from one side of the trading range back towards the other side of the trading range, from low of day back to high of previous week, and overall back up to the high. Now, of course, once we get back up to the high, depending on how this week's template develops, again, back to that stair-stepping sort of pattern, peak formation low, level 1, level 2, level 3. Level 3 means absolutely nothing except we're at the high of the previous week. We're at the high of that range. And then we get this multi-day, multi-session peak formation high made at the high of the week on, what is this, Thursday? on a Thursday to go from high of week, high of day, back down to, at minimum, previous week's high level, or even back down to previous day's low, which it looks like this actually made it there. Same thing, different weeks. A previous month's low has been broken out of. A previous week's low has been broke out of, and it actually failed right here. So now again, you can project this line across. Now I don't know what's going to happen the next week, but once that week has played out, and now we have peak formation low, peak formation high, I know that we may be in a range. And when we come back down to the bottom of that range, I might look for buying opportunities depending on the template. And once we go back to the high of that week, or the high of that range, we may now be in a 3-day template for a pump and then a dumping sort of scenario, as Stacey Burke would say. So this previous month's low breakout area, maybe we're in a down moving market. I have no idea. We're making lower lows and lower highs. But when we trade back up, again, understanding that we're in a range, and one of the setups that you can look for while you're in this range, or the one that I prefer to look for, the 3-day templates that I prefer to look for once these ranges have been established, is that nice stair-stepping pattern, especially when it's in line with these breakouts, right? We're in breakout. Yeah, this breakout has failed, but we're still in breakout for the month. And we've traded back up to that breakout level once, twice, and a third time, Friday, Monday, and then Tuesday. But it's the reoccurring behavior that's important. The fact that we've identified that we're in a range, the fact that we've identified that we have 3 levels of rise back up to the high of a range, especially when you're in breakout mode to the downside. I can't predict the future, what's going to happen over here. Those are the facts and the things that I'm looking at on any given day. Once we're in a range to identify whether or not I can still trade a setup on that pair. And if I don't have one, then I'm just not going to trade that pair. I'll go find something else that fits the bill a little bit more. To end this video with the most simple explanation possible, peak formation high, breakout that has failed. Peak formation low, breakout that has failed. Now we have a range. You can project these levels across. And then whenever you're in the middle, if you're looking for trading setups with the understanding that, hey, we're in a trading range, you can go and look for that style of template where it's over the course of 3 days. They've went from one side of the range back to the other side of the range in a stair-stepping pattern. 1, 2, and then 3. Remember, 3 means absolutely nothing unless you get that peak formation high at the high of the day. And I'm looking for these templates at the high and the low of the current week, in line with the 3-day cycle, in line with all those things, and then taking those trades based off of the market conditions. Still looking for the 3-day templates, still looking for everything that I've already discussed in that previous video, just understanding that you might need to adjust the way or the kind of template that you're looking for slightly once you've identified that you're in these ranges. Hope you all have enjoyed this video. Hopefully it has provided you with some kind of value. If you're confused about what type of setups you're looking for, all of them are in that previous video. Learn that video, learn the different kinds of setups, come back to this. It will make more sense. Hopefully you all have enjoyed. Enjoy the rest of your weekend. Bye-bye.